Hello everybody, welcome back to the channel. I saw a YouTube video recently of a Morningstar top pick for 2022, and they actually picked the CICT as a top REIT for 2022. So they gave the justifications and the reasons that I will go into later. But for me, right, actually I prefer Ascendas REIT. So let's talk a bit about it. So this is the YouTube video that emerged from my YouTube feeds recommendations. So you can just Google Morningstar Top Picks REITs, and you can kind of come across this video. So this is the interviewer and this is the analyst, and his justification was CICT for the diversified portfolio and the outlook for office as positive, and the outlook for retail is also positive. So the full year distributions, I think they are expecting a full growth of DPU growth of 8% over the next 2 years. So this is the justification. So I agree with what they say, but actually I prefer Ascendas REIT, and I'll talk about the reasons now. I think right now in 2022 we have a wall of worries. This is probably the year where you have to worry the most about a whole host of problems. In 2020, you actually just one worry, right? And that's COVID, right? In 2022, you have this whole wall of worries. First of all, you have Russia-Ukraine crisis, stemming to invasion and almost a war. And because of that, you have oil prices going higher, wheat prices going higher, feeding to inflation. And with oil prices going higher, you have utilities going higher as well in electricity prices. And especially in Europe, right, where you see the conflict happening, it's not just a matter of the price, it's also a matter whether or not you can actually get electricity and gas in the future. So for Europe, this is really worrying. The inflation problem is now forcing the central banks to hike rates aggressively, so we have rate hike worries. And in China, you have COVID, the zero COVID strategy still going on with lockdowns all over. And see, with this host of problems, you have inflation problems leading to consumption slowdown because consumers are now finding it more difficult to spend money on consumption, having to fork out more money for the mortgages and for utilities and rental. And all this means a recession is looming. In the REIT space, something which is not very commonly discussed, which I think is very important, is actually the cap rate window narrowing. So this is not a term that people talk about very often, but because for the past few years rates have been so low, this has never been a very big issue. But now you have a very interesting situation where rates are rising so fast to a 3%, 4% level, and cost of equity also going up because the share price are falling. And therefore, if you look at the cap rates of the assets that the REITs typically buy, they are also in the region of 4 to 5 to 6%. So actually the yield pickup from issuing equity and issuing debt and buying assets is really narrowing. So they can't really do a lot more accretive acquisitions with the current dynamics. So this is a dynamic which is quite unique in this environment stemming from the rising interest rates. So we'll look at each factor in each case and talk about how Ascendas REIT fares. Actually, if you have a REIT in mind, you can also kind of think about your REIT and compare it to all these problems surfacing on the wall of worries. So for Ascendas REITs, let's look at the Russia-Ukraine crisis. And you can see that for the portfolio geographically, only 10% is in UK and Europe, right? So well, it's not zero, but it's not like 50% either, right? So it's not that crazy. And if you look in detail, actually a lot of the stuff in UK is like the data centers and the business parks. And for Europe, it's also data centers. So it's not that crazy, right? In terms of the Russia-Ukraine crisis and the possibly impact on gas prices and gas availability and stuff. So I think it's pretty well shielded. A bit, just a bit of a problem, but not that huge, I think. So this is addressed. And of course, China COVID has nothing to do with AREIT, right? Because yes, nothing in China. So next we look at the inflation and the impact of utilities. So if you look at it, the when there's inflation, the best thing to do is just to raise your prices, right? You can see that for Ascendas REIT, they're actually managing to raise their rentals in accordance with inflation. So for the last quarter, they raised the rentals by 13%. So that's way enough ahead of inflation, right? A large part of it is because of the indexation of the properties. So the rentals are indexed to CPI. So when CPI goes up, the rentals go up. So helping to arrest inflationary problems. So you can see that with the rise in rentals, inflation concerns and utility rises are kind of arrested in certain ways. Next, look at the impact of recession and slowdown in consumption. You can see that the leases are still quite long, right? Around 3.7 years of leases. So even if there's a recession in the next 1 year, it's not like our rentals will all disappear, right? So there's still 3.7 years of a well. So if there's a recession and the consumption slow down, it's not that crazy. And for a consumption slowdown issue, it's probably more of a matter for retail REITs, right? So if the consumers are not spending, I think the retail REITs will face the brunt of the problem. So it is kind of arrested in that ways also. In terms of the rate hikes, I think this REIT has it really well covered. If you look at the interest rate management, they quantify it. If you raise rates by 1%, the impact is 2%. It's always going to be negative because the all REITs utilize debt. So if the cost of debt goes up, there will be a negative impact. But it's still 2% only, right? So like the rental reversions that you saw just now of 13%, well, should be going some ways to arrest this concern. And finally, the cap rate window. I think this is the one of the strongest points of Ascendas REIT, in that it actually has a multi-asset portfolio. So if you look at some REITs which are just focused on one asset class, this cap rate window can cause big problems, right? Because if the cap rate for that asset class is still at 4%, and rates are rising to 4% for interest, debts, and for equity is rising to 6%, then there's no way they can do an accretive acquisition, right? So for Ascendas REIT, they have the advantage of being in multi-asset classes. So you can see there's a business space and life sciences, so offices and business parks and stuff, right? You have also logistics assets, you have data centers, you have industrials. So these are like 4 or 5 asset classes they can play with, right? And within the business spaces, you have also rental spaces as well, right? It's quite a small portion, but nonetheless, it's still there. So you have like 5 or 6 asset classes you can play with, and they are in 4 different geographies, right? So we have different asset classes in different geographies, so they can always try to utilize the advantages in one area to mitigate the disadvantages in another area, right? So you can borrow in one currency and fund in another asset class in another geography when there's a decent pickup in the yield, right? Of course, subject to a proper risk management, of course. So I think this is quite a strong point for Ascendas REIT in this concern of cap rate window narrowing. So they can still make some aggressive acquisitions utilizing lower debts in some places to buy higher yielding assets in some other places. So you can see AREIT kind of addresses all these issues, right? For investors of REITs, I would encourage you to take your REIT and think about the wall of worries and all these problems and how your REIT can address all these problems. So if you like this video, remember to subscribe and like and share.